If you want your Xero file actually reflect your business and not confuse it, this video is going to help you identify and avoid the 9 most common mistakes I see all the time in client files. And trust me, some of them are costing you more than you think. And no, this isn't about tiny technicalities or textbook theory. These are real issues I've spotted in many small business accounts over the years. And these mistakes can easily snowball, causing you not only headache, but also tax penalties. Stick around to the end. I share one time-saving feature in Xero most people miss. If we haven't met yet, I'm Christy, the bookkeeping tutor. I'm a bookkeeper and accountant, and I've been using Xero daily over 6 years now. I love bookkeeping, and it's my passion to share my knowledge and experience with you to make your business life much easier. Just a quick heads up before we finally begin. This video isn't sponsored or endorsed by Xero in any way. I'm a Xero Bronze partner, which means that I use their software with my clients in my accounting practice. Okay, let's get started. Xero is often advertised as software with smart features designed for small businesses and sole traders, and that makes compliance a breeze. It makes the business owners believe that all can be done with a click of a button with the help of the inbuilt automations, which is, let's be honest, partly true, provided you have some skills and the openness to learn the basics. And I mean the bookkeeping basics. Otherwise, instead of tidy online bookkeeping records, you'll end up with a great mess and hefty price to pay either to the tax office if you get audited or to a professional bookkeeper like myself for getting your records back in shape. Therefore, in this video, I talk you through the 9 most common errors I generally see in a small business Xero file. Some of them seem almost too simple to matter, to be honest, but they really do. The smallest error that is done again and again and again causes huge discrepancies at the end. The sooner you fix it, the less price you will pay. Okie dokie, let's get started with the big one. The unreconciled bank transactions. I've heard various explanations for this. This is not a business expense. We don't really remember. Xero didn't populate the fields correctly, and so on. But this is now how it works. For your financial records to be reliable, whether it's for tax, applying for a loan, or just for understanding your business numbers, you must reconcile every bank transaction. In plain terms, there should be no transaction sitting here in the Reconcile tab. Every single item needs to be matched and allocated. Now let's take it a step further. The second mistake is forgetting verifying the bank balances against the actual bank statements. Just because your bank feed is connected to Xero, that doesn't mean that your account is properly reconciled. Even if you see this nice green tick and the word reconciled. I must admit that Xero's terminology is rather vague in this regard. The green tick only means that the transactions have all been matched, not that your bank balance in Xero is correct. It doesn't mean at all that your bank account is reconciled in accounting terms. So what can you do? Well, from time to time, please compare your Xero bank balance to your actual bank statement. If there is a difference, investigate what causes the variance and fix it. The golden rule is that you need to do this exercise at least monthly. Oh yes, you heard it correctly, at least monthly. But of course, you may do it more frequently, daily or weekly. Honestly, leaving this until the end of the financial year makes it so much harder, if not impossible, to find and fix all the discrepancies. Okay, well, this will lead us to our third type of mistakes, the duplicate transactions. This is my personal favorite, and this is where things get really messy. Around 80 to 90% of the cases, the difference between the zeros and the actual bank balance stems from the duplicate transactions. You wouldn't believe how common it is. And they are really, really hard to spot, to be honest. And the only way to spot them is always double checking your work. Checking the bank balance and your reports that I will talk about a little bit later. There are multitude ways how you end up recording the same transactions twice in Xero. One typical example is when you add a payment to the invoice in the Invoices menu, and then on the bank feed, Xero doesn't auto-match it during the reconciliation for some reason. It can be due to a cent difference, it can be that the client paid 2 invoices in one payment, or it can be because of a bank transaction fee or merchant fee. Anyway, because it is not manually matched, you are allocating it directly to the income from the bank feed. So the result is that you enter the income twice and your profit is overstated. The next super common mistake is misclassifying transactions. And I'm not really talking about coding fuel expenses to travel expenses instead of motor vehicle expenses, or something you bought in Bunnings to inventory instead of purchases. No, these are not ideal, of course, but it won't really affect your bottom line, your net profit, and also have rather small impact on your taxation. But for example, if you are allocating a laptop as an office expense instead of an office equipment, that is a fixed asset, or when you're taking up your car loan repayment as an expense rather than allocating it against the loan account, that will alter your profit and therefore your taxable income. Another prime example that I often find when I'm doing a cleanup job is that the actual payment to the employees are coded to the salary expense account instead of the wages payable. And when you're paying superannuation, it's allocated to the superannuation expense instead of the liability. I know this may sound way too technical, but in my view, this is where understanding the difference between an expense, an asset, and liability does really matter. Otherwise, not only a great mess is created in a Xero file, but also your bottom line, the net profit, is incorrect, and therefore your tax will be incorrect. The fifth common mistake relates to GST. Well, obviously, I'm currently talking about the Australian GST, but if you are in New Zealand or the UK or wherever in the world, the same logic applies to almost all value-added tax. The main principle is that you can only claim the GST that was actually charged to you. You are not allowed to claim GST on each and every purchases, especially not for those where there was no GST charged. So when Xero auto-suggests a tax code based on a previous similar entry or the account you have chosen, it's not always right. You are inclined to press OK without looking at it, as Xero auto-filled the fields for me. So you assume it's right, but occasionally it is not. Therefore, you must check it on the supplier's bill whether GST was charged and change the GST code of that transaction accordingly in Xero. This is especially important for overseas purchases and software subscriptions when your contractor isn't GST registered, hence they cannot charge you GST. Residential rent payments doesn't attract GST in Australia, similarly to the loan repayments. And I could list many, many more, but that's not our main topic for today, so I'm going to stop here for now. And emphasize that my point here is to take that extra moment to double check the GST field before you click OK, because Xero streamlined reports, including the activity statement, are only as good as the input data you put in. As you remember, garbage in, garbage out principle applies greatly here. The next one is a sneaky oversight, not connecting all business accounts to Xero. You might have your main bank account synced to Xero, but what about your business credit card, your Square account, your PayPal account, your secondary business bank account, or business savings account, or a loan account? If they are not in Xero, the transactions that are flowing through them aren't recorded either. and that means that your financials are incomplete. The seventh is something you often hear: mixing personal and business expenses. Well, it happens, I know. You use the business card to pay for something personal or vice versa. It's life, but here's the risk. If personal spending is coded as business expense, you are in fact inflating your deductible expenses, and the tax office won't really like it, will they? If business spending on the personal card is forgotten, you are missing out legitimate deductions. So what can you do? Well, simply code personal expenses as drawings or loan, and on the other hand, reimburse from your business bank account business expenses paid personally, and record them properly then. That's the easiest solution that is often overlooked. The next one is not customizing your chart of account. Xero gives you a default chart of account, but that doesn't mean at all that it fits your business. Some of my clients didn't even know that they can add or rename accounts in Xero, and some just didn't bother. In my view, your chart of account should be reflective of your business and of what matters to you. For example, separate out your fuel expenses from the services and maintenance expenses if that matters to you. It's your business, your decision. If you find yourself dumping everything into general expenses, it's time for a chart of account review. And here comes the last but very crucial one: ignoring your reports. A lot of users are just entering the transactions and then they think they are done. But no, in reality, you need to look at your reports from time to time. Yes, the profit and loss statement, the balance sheet, the age receivables, age payable reports, they can really feel intimidating at first, but they help you understand your business, and they also help you spot the errors. For example, and let me give you a very extreme example. If your balance sheet says that you have 100,000 on your bank account, but in reality you don't, that's a red flag, and also a connection to our mistake number 2 that we have covered before. Just spend 5 minutes with your reports and have a look at it and question everything, and really everything you don't understand. Why is there a significant balance on a clearing account? Why do I see thousands on GST liability? How come that blah 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 blah? Just ask the questions. In short, make sure you do understand each line and know what's behind the numbers. This way, you overall minimize the potential errors in your Xero file. And one bonus from me that is also a great time saver. Have you set up automatic reminders for overdue invoices? When I check this with my clients who are using the invoicing feature of Xero, 99% of the time it turns out that they haven't. You want your clients to pay on time, don't you? You have so many things to do in your business, and individually following up the overdue invoices are just time consuming. Turn on the reminders. It's pretty simple to do, and let Xero do the follow-ups for you. But don't forget to reconcile your bank feed regularly to avoid sending out reminders to those who already paid, as you don't want to do that, do you? So there you have it, 9 common mistakes to avoid in Xero, plus a bonus one, and more importantly, some advice how to avoid them. I encourage you to log in your Xero file now and check for a few of these things. Maybe pick just 2 or 3 of them to focus on today. I really do hope that you have straight records in Xero, otherwise you have some cleaning up to do. If you found this video helpful, please hit the like button and consider subscribing for more practical bookkeeping and Xero tips. If you have any questions or comments, just drop them below. I really love hearing from you. Thanks for watching. See you in the next one.